So this is one of the IPOs he threw out recently, and this is a benefit of being in the traders group. You have to at least be a gold member of DaveLandry.com to be part of this tribe, so to speak, to steal a word from Sakota. But he threw this one out there, and I thought it was pretty interesting. So you got day 1, day 2, day 3, day 4. Now, technically, the earliest you should buy an IPO is the close of day 5. Okay. There are cases where you might get a little early, and I'll show you that in just one second. Now, the day 1 rule states that, and this is called buy at B. Like if a market's going to go from A to C, it has to go through B to get to C, right? So with the IPOs, it's a bit of a breakout type of pattern. You're actually buying that new closing high, okay? Now, back when I did the IPO course and did a lot of research, I learned that the day 1 of trading, the first day of trading, can be very significant. A lot of times, I don't know if there's anything disingenuous happening or whatever, but people might have owned it pre-IPO. There's a lot of dumping that occurs, pumping and dumping that occurs. And a lot of times, and you're going to be shocked when you go in and do this research, a lot of times that day 1 high is the all-time highs for IPOs. If you don't walk away with anything from today, never buy an IPO on the day 1, okay? Wait to see if you have some follow-through. And that'll keep you out of a lot of trouble. In fact, wait until day 5. Now, assume this day 4 high was below this day 1 high. Then the closing high, let's say the closing high was here, okay? That's not your buy. Your buy is the first close above that day 1 high. But since the day 4 did penetrate that day 1 high, but not by much, but the day 1 rule technically is no longer in effect. So you could argue that, well, that's just not enough to make a difference. But it mechanically, if you were trading this pattern or setup, the fact that it violated this, the day 1 rule no longer works. Or the day 1 rule would state you'd have to close above that day 1 high. But as soon as that gets penetrated, if that happens before day 5, okay, then that rule is no longer in effect. So the buy would be any close above, let's say round number 750. Okay, it's like 745 or something. Anyway, so there's day 5. So you would buy on that close. So kudos to John, our group expert, for recommending this one or mentioned it. Now, I did front run this one by getting it a little early because the range was expanding, okay? And so I was looking for a 1-point profit. I was able to get that the next day. And you can see there's the trade down there, 600 shares. I didn't go in with huge size, okay? That's what, $6,000 margin, round numbers, some maybe even less, 5,000 margin. And so you could see that I had a limit order in, and I went ahead and put a limit order good till canceled, after hours limit order, which one brokerage is not taking them for some reason on these go-go stocks like this. I don't know why, but the other brokerage is, so that makes life a lot easier. Anyway, out half, and then the stop gets trailed higher on the remainder. Now, since it's moved so far nicely in my favor here, that 1-point stop is going to be a little bit bigger. That 1-point stop might have been a little tight going in, but I figured it's about as tight a stop as I could use and still have a shot at this. Now, let me show you why I front ran it a little bit. So we know from the prior chart that anything above 7 is a buy on close. Okay, so the stock opens like 7 3/4, and then it has this big pop higher. So you're getting an expansion of range. If you get an expansion of range on day 5, that's for if you're more experienced. Okay, get a few dozen of these under your belt. Okay, literally like 2 dozen of them, successful buy at B type of trades, and then look to kind of improve upon it a little bit by front running the entry just a little, okay? So you can see that it was really expanding higher on that day. And remember, any close above 7, I think it's the number, would be a buy. So I got in a little bit early. And again, it was a range expansion on that day. So I got in at 896. And that was just above that high. Okay, so it was really taking off, and it formed that high, came in a little bit, and I said, okay, I'm going to put in a stop entry order. So if you look down here, STP, so that's a stop order above the market. Okay, and then it took off nicely. It closed at 967. Now, technically, with the buy ID pattern, you would be buying that close. And believe me, I've bought, I don't want to say hundreds, I don't know how many, but lots of IPOs, maybe hundreds, at the close of the day, like 2 minutes before the close or 1 minute before the close, or sometimes actually almost literally on the close. And that's a great thing to do because let's say this thing spikes intraday, comes back in. If you get to close at a new closing high, you know that there was no selling at least going into the close, and that there was actually just the opposite, buying. Okay. But again, as you get a little bit more advanced, you might want to think about, especially good markets. Okay. If the market's at all-time highs, NASDAQ at all-time highs, especially, and you're seeing these wide range bars on day 5, it might be worth a shot.